Hey, afternoon guys. Welcome back to another episode of the Avoiding Broke video and podcast and whichever other medium you're catching us on. I'm really glad to be with you today, guys. You'll probably see from the balloons, we've had a really busy week. It's been Theo's birthday, and so we've got baby shark themes, lots of activities in the indoors, and we're really gearing up for what could be a really busy year ahead. So today, guys, what I really wanted to share with you was just some info about the key financial moves that we're making at this moment in time. And the reason I think it's so important is if you think a lot of us kind of got through to Christmas, we felt 2021 would be a better year. The year started, I think, fairly quickly, but there's still a lot of uncertainty about just where we're going in terms of our finances, in terms of just the world overall, in terms of treatment of this virus, etc. And what's really been occurring to me, and this has been keeping me awake a lot, is the fact that you don't ever want to be really static. You don't want to be doing nothing right now, because the stuff that we're doing right now is going to basically set up all of the future moves that we're going to make in the future. So I want to make sure that we're doing some really good, smart, clever things now to build forward for a very unpredictable future. Let's be really fair. That's what I want to share with you today, guys, right? So, I mean, look, just thinking firstly from an income perspective, and you know my views, right? Which is that you need to do as much as you can to generate your income. You need to be thinking really carefully about making sure you've got a good flow of income, predictable income, and multiple sources of income. As you go through time, that becomes a lot less predictable for many of us. So, for example, if you're not currently working and you find yourself furloughed, your income is really unpredictable. But even if you were in a profession whereby you were working and were used to decent bonuses, I think a lot of that's come under fire again. So for a lot of us, we need to re-baseline where we see our income. So if, for example, you were used to earning 50 before, but a component of your 50 was overtime and maybe some bonus, now's the time to rethink that and just start phasing things back down. Because once you adjust your income picture, obviously that adjusts a lot more of your views on expenses and what you've got disposable. So we, for example, are revising down our income because some of the types of income that we may have been getting before, may have been getting quite predictably, they may not be there right now. So this is just about adjustment. If it turns out that the money does come in, great, we've lost nothing and we've got a bigger buffer pot. The second thing that we're doing, guys, is really looking carefully at our cost line. And you know what I always say, the most accessible way of really improving your financial health and well-being is to hit your cost line. Think about that really dynamically, get rid of stuff you really don't need, and you will see your disposable money ratchet up. We've been going really hard at it. So we're looking at right now we're at the period of time where we're remortgaging. We've got like a lot of different utility bills. We've got different insurances. They're all kind of coming through because roughly when we bought this property. So all of these things, we are working really hard on getting those costs down. And we've also set some really simple rules about things like, just like our household shopping, about utility bills. I am actively trying to get all of those costs down as low as possible, because the cost line is where I've got the most flexibility. It's where I can do the most things to improve my overall financial health. So really important you guys are thinking about it and making the moves you can on costs. So then thinking about where we get a little bit more creative, right? So if you get some disposable income and you start thinking about what you're doing with it. Now, a question I've had from a lot of people is what do you do with your money? Where do you put it? Blah, blah, blah. So look, I'm just going to give you a sense of what we're doing right now and why. So the first thing is keeping things like pension contributions quite flat. But importantly, I'm reallocating everything in pensions. That's really worth sharing with you. So guys, part of the thinking is if the economy worsens significantly, having exposure to equities, right? To having exposure to the stock in different companies or bonds issued by companies is going to be a lot riskier than holding something like gold or maybe treasuries, right? That's my theory. So I'm reallocating a lot of our money. I manage my pensions myself. I've got several pensions. I manage them myself because I trust myself a lot more than I just trust myself a lot to make those decisions. Then I'm reducing my exposure to the stock market. That's called de-risking. So I'm reducing that exposure. I'm happy to hold more of my money in cash, or where it's possible in things like gold or treasuries. And that is a way of de-risking because I don't want to lose money in the future. I want to protect that as much as possible. You then got important things like cryptocurrency. So a lot of people, I think there's a bit of a few different camps that are emerging in the crypto space. So you've got some people who went fairly early. They know what they're doing. They've probably made some good money and they're really sold on what crypto is. I think you've got some people who kind of maybe started going like last year, started learning a lot more about cryptocurrency, learning more about trading. They've got some positions, they've made a little bit of money, but they're still not really all in. And then I think you've got others who are maybe curious and they're looking to get in the space, but they haven't quite done it yet. So guys, my take on this, right, is I'm probably more in the middle camp. I mean, I kind of went early-ish at points, but I'm in the middle camp of asking the question, do I go all in? Now, instinctively, I think the answer is no, not for us at least anyway. But what I do think is really good is that we've got exposure, we're starting to make some profits, and very importantly, we are building the potential that if things really take off even more than they have done, I think we're going to be well positioned. And you know, guys, part of it is I think I'm kind of more clued up maybe than the average investor, and in which case I feel comfortable with the decisions that we're making, and we're actively moving a chunk of our net worth into cryptocurrency, and I'm actively managing that. I think for anybody out there, now is a time that you should be learning, and now is a time that you should be looking at crypto as a potential alternate store of value and learning about it now so you can kind of get yourself involved early enough. I'm not encouraging you to go out there and actually take your exposure, but I can see really positive reasons for it. We are actively moving more and more into that space, and we're really happy with that. You then got some other interesting investments like real estate. We still remain quite bullish on real estate. We're still actively trying to get things done in the real estate space. And I think it's a very, very good alternative in terms of a reliable store of long-term value that is kind of you're less able to manipulate. So it's less open to kind of the different fluctuations and inconsistencies that we see in the macroeconomy. For that reason, I remain bullish. I'm going to keep putting whatever I can into real estate investments. Now, I think we're just going to see a bit more of a balance because I'm more bullish on crypto as well. And I think, guys, for those people who don't necessarily have those types of options, so where you've got some money but you don't quite have enough to say go and buy another property, and maybe you don't quite understand the risk associated with cryptocurrency, so you're a little bit reluctant. What I'm thinking here is just to make sure you're in a good position, not to basically lose out. I've seen some really interesting videos like on things like TikTok recently where people are still pushing on index funds and trackers, and this is the quickest way to become a millionaire. That logic, guys, we need to understand it very, very carefully, because the stock market has got a huge amount of inherent risk. There is a lot of thinking right now that we could be in a bubble that is ready to pop. You've heard me say previously that the performance of the stock market doesn't seem to have a well correlated relationship with the real economy. And that's the kind of stuff that we've got to be careful of, guys. Because where that relationship doesn't exist, the stock market could be ready to overheat. And we've just got to be careful not to lose out on anything. And I think that's kind of really important because we're all on a different spectrum of investments, all have different levels of maturity, all have different risk appetites, and all have different amounts that we can afford to lose. And I think now's a really important time to think carefully, understand where you are on that spectrum, and adjust your risk accordingly. So that's it, guys. There you have it, right? That's the key moves that we're making right now. We are actively trying to adjust what we see as our income profile. And that's just a way of kind of hedging our bets a little bit and trying to be a little bit more conservative in how we're approaching things. We are very, very, very active on removing costs because cost remains the best lever for us to improve our financial welfare as it stands right now. We are actively going after some new investments in the cryptocurrency space, in the property space. We are de-risking our pensions because we want to reduce our stock market exposure, and we think we need to be a bit more careful with our pensions and move more into cash, maybe treasuries and gold. And we are actively staying involved in this space, always learning. That's really important. Those are the moves we're making, guys. I'm sharing it with you so you've got awareness. You've got things that you can use to go and test yourself. As ever, if you've got any questions for us, you can drop them in the comments and we'll be really happy to get back with you and just share what we're thinking. Because as ever, guys, the more we can learn and you can learn and we share is the more we educate each other. And that's the real key of this, right? We want to be in a position whereby we as a collective help to educate and uplift one another through sharing our information, our knowledge and our experiences. As ever, guys, hopefully you've taken some great value from this. Leave a like, leave a comment, smash a subscribe if you're watching us on YouTube. You can find us at Avoiding Broke on all mediums, all platforms. You know we're active. And yeah, we're really looking forward to being with you next week. Okay, guys, until then, enjoy the rest of your weekends. I'll see you soon. Bye-bye.